February 6th. Why this payment could look different. I need you to pay very close attention to this update because what happens on February 6th could explain why your Social Security deposit looks different than you expected. And for some of you, that difference could mean more than $2,100 landing in your bank account. Now, I understand the skepticism. When you hear numbers like that, it can sound exaggerated. But this time, the explanation is grounded in something very real. The Social Security Administration has already processed the 2025 Cost of Living Adjustment, or COLA. Benefits have been recalculated based on updated formulas and your lifetime earnings record. Payment schedules have been finalized, and millions of Americans are about to see the results. Whether you receive retirement benefits, Social Security disability insurance, or supplemental security income, the next few weeks are critical. Many seniors are living on fixed incomes, budgeting down to the last dollar. You deserve clarity, not confusion, about what's coming and when. The key questions are simple. Who qualifies for a February 6th payment? Why could it exceed $2,100 for some recipients? And is this an extra payment or just a timing adjustment? In this video, we are going to break it all down step by step so you know exactly where you stand. Before we continue, comment below. Are you receiving retirement, SSDI, or SSI? Let's see understanding the Social Security payment schedule. Before we talk about the dollar amounts, we need to clear up one of the biggest sources of confusion. Social Security does not pay everyone on the same day. The Social Security Administration divides retirement and SSDI payments based on your birth date, and this system has been in place for years. Yet every month, millions of Americans are still surprised by when their deposit arrives. Here's how it works. If you were born between the 1st and the 10th of any month, your payment arrives on the second Wednesday of the month. If your birthday falls between the 11th and the 20th, you're paid on the third Wednesday. And if you were born between the 21st and the 31st, your payment comes on the fourth Wednesday. That structure applies to retirement and SSDI beneficiaries. But February 6th this year falls on a Thursday, not a Wednesday. That's why this date is raising eyebrows. It does not match the standard retirement or disability schedule. So who is February 6th actually for? That's where supplemental security income, SSI, enters the picture. In the next section, we'll break down why SSI recipients may see a February 6th deposit, how calendar shifts affect payment timing, and why some people may mistakenly believe they're getting an extra check. Why February 6th is a special SSI payment date. Now let's focus specifically on February 6th, because this date does not follow the standard Wednesday schedule for retirement or SSDI benefits. February 6th is tied primarily to supplemental security income, or SSI. Unlike retirement and disability benefits, SSI payments are normally issued on the first day of each month. But when the first falls on a weekend or a federal holiday, the Social Security Administration moves the payment to the last business day before that date. That adjustment is designed to protect recipients, ensuring that funds are available on time, not delayed by bank closures or government holidays. However, calendar alignment this year has created a situation where some SSI recipients may see their February payment processed in a way that draws attention to February 6th. Administrative processing timelines and advance payment handling can cause deposits to appear slightly outside what some beneficiaries expect, and this is critical to understand. If your SSI payment arrives earlier than the traditional first-of-the-month schedule, it is not an extra payment. It is simply next month's benefit arriving early. That distinction matters for budgeting, because if you receive your February benefit ahead of schedule, you will not receive another SSI deposit until the following month. In the next section, we'll address the biggest headline question: how can some recipients reach or exceed $2,100 in February? How some beneficiaries can receive over $2,100. Now let's address the number that's getting the most attention, the possibility of receiving $2,100 or more in February. At first glance, that figure may seem confusing, especially for SSI recipients. The maximum federal SSI benefit for an individual in 2025 after the 2.5% COLA increase is $967 per month. That alone does not come close to $2,100. So how do some people reach that higher amount? The answer lies in combined benefits. Many Americans receive what are called concurrent benefits, meaning they qualify for both Social Security Retirement or SSDI and SSI at the same time. SSI is a needs-based program designed to supplement limited income. If your retirement or disability benefit is relatively low, SSI can add to it up to the federal limit, depending on your circumstances. Then there are state supplemental payments. Certain states, including California, New York, and Massachusetts, provide additional funds on top of federal SSI. These state-level supplements can add several $100s per month, depending on eligibility. Now add everything together. A retirement benefit of $200 plus SSI supplementation, plus a state add-on, plus the 2.5% COLA adjustment. Suddenly, you're looking at total monthly benefits reaching or exceeding $2,100. In the next section, we'll break down retirement benefits specifically and explain why some retirees receive significantly more than the national average. Retirement benefits. Why some payments are much higher. Now let's shift our focus to Social Security retirement benefits because this is where the numbers can become significantly larger than many people realize. In 2025, after the 2.5% cost of living adjustment, the average Social Security retirement benefit is approximately $1,760 per month. But remember, that's just the average. Half of retirees receive more than that, and some receive substantially more. Your retirement benefit is based on your highest 35 years of earnings, adjusted for inflation. The higher your lifetime earnings, up to the Social Security wage base, the higher your monthly benefit. But earnings are only part of the equation. Timing matters. If you claim benefits at age 62, your monthly amount is permanently reduced. If you wait until full retirement age, typically between 66 and 67, depending on your birth year, you receive 100% of your calculated benefit. And if you delay claiming until age 70, you earn delayed retirement credits that increase your benefit by roughly 8% per year beyond full retirement age. For high earners who delayed until age 70 and consistently earned at or above the wage base, the maximum monthly benefit in 2025 exceeds $4,800. So when we talk about $2,100 in February, that amount is not extraordinary for many retirees, especially those who planned strategically. In the next section, we'll examine SSDI payments and how family benefits can push totals even higher. SSDI payments and family maximum benefits. Now let's talk about Social Security Disability Insurance, SSDI, because this is another category where total monthly payments can exceed expectations. In 2025, after the 2.5% COLA adjustment, the average SSDI benefit is roughly between $1,500 and $1,275 per month. But just like retirement benefits, that's only an average. Your actual amount depends on your prior work history and lifetime earnings before becoming disabled. Here's where it becomes especially important for families. If you are receiving SSDI and you have eligible dependents, such as a spouse, minor children, or in some cases an adult child disabled before age 22, they may qualify for benefits based on your earnings record. This is known as auxiliary or dependent benefits. Social Security sets what's called a family maximum. That means there is a cap on the total amount payable on one worker's record. However, that family maximum can significantly increase the total household benefit. For example, if you receive $1,600 per month in SSDI and your child qualifies for dependent benefits, your total family payment could exceed $2,000. Add multiple dependents, and that number rises further up to the family maximum threshold. So again, that $2,100 figure is very realistic for certain households. In the next section, we'll clarify one of the most common misunderstandings. Are early February payments actually extra money? Early payment does not mean extra money. Now we need to clear up one of the biggest misunderstandings surrounding February 6th. If you receive an SSI payment earlier than expected, that does not mean you are receiving bonus money. It does not mean the government added an extra check. It simply means your regularly scheduled monthly benefit was moved forward due to calendar timing. SSI is normally paid on the first of the month. But when the first falls on a weekend or holiday, the Social Security Administration issues the payment on the last business day before that date. This ensures you are not left waiting because banks are closed. However, when payments are advanced, it can create confusion. Some beneficiaries check their accounts, see money arrive earlier than usual, and assume it is an additional deposit. It is not. If your February benefit arrives early, you must budget carefully because that payment is intended to cover the entire month ahead. you will not receive another SSI payment until March. This timing adjustment has happened many times before, and it will continue to happen whenever the calendar requires it. Understanding this protects you from financial stress later in the month. In the next section, we'll address another major concern many beneficiaries have: benefit reductions, earnings limits, and potential clawbacks. Could your benefit be reduced? While many people are focused on whether their February payment will increase, others are quietly worried about something else. Could their benefit be reduced? Let's address that directly. For the vast majority of beneficiaries, your Social Security retirement, SSDI or SSI payment is secure. The 2.5% COLA for 2025 has already been applied, and unless your personal situation changed, you should receive exactly what you're entitled to. However, there are specific circumstances where benefits can be adjusted. If you are receiving retirement benefits but have not yet reached full retirement age and you continue working, your benefits may be temporarily reduced if you earn more than $23,400 in 2025. This is known as the earnings test. Once you reach full retirement age, that limit disappears. If you owe back taxes or certain federal debts, your payment could also be partially offset. For SSI recipients, because SSI is a needs-based program, the Social Security Administration reviews your income and resources annually. If your income increases or your countable assets exceed $2,000 as an individual or $3,000 as a couple, your SSI payment could change. But here's the key point. Reductions are tied to changes in your financial situation, not random cuts. In the next section, we'll discuss strategies that may help you maximize the benefits you're eligible to receive. How to maximize your Social Security benefits. If you're receiving Social Security, SSI, or SSDI, one of the most powerful things you can do is make sure you're not leaving money on the table. Let's start with married couples. If one spouse earned significantly more over their lifetime, the lower-earning spouse may qualify for spousal benefits worth up to 50% of the higher earner's full retirement age benefit. Many couples overlook this. If you claimed early without reviewing spousal options, it may be worth speaking with Social Security to confirm you're receiving the highest amount available. Now, for widows and widowers, survivor benefits can be even more impactful. You may have the option to switch between your own retirement benefit and a survivor benefit based on your late spouse's record. In some cases, delaying one benefit while collecting the other can permanently increase your monthly income. For SSI recipients, maximizing benefits means carefully managing income and resources. Remember, SSI has strict asset limits, generally $2,000 for individuals and $3,000 for couples. But not everything counts. Your primary home does not count. One vehicle does not count. Household goods and personal belongings do not count. Understanding what qualifies and what doesn't can protect your eligibility. In the next section, we'll explore additional state and local programs that could increase your total financial support. State programs and additional support. You may qualify for beyond your federal Social Security, SSDI, or SSI benefits. There may be additional programs available at the state and local level that can significantly improve your financial stability. Many states offer supplemental payments for SSI recipients. As we discussed earlier, states like California, New York, and Massachusetts provide added monthly support on top of the federal SSI amount. If you qualify, those supplements can increase your total benefit by several $100s per month. But that's only the beginning. Property tax relief programs are widely available for seniors in many states. These programs may reduce your annual property tax bill, freeze assessed values, or offer direct rebates. If you own your home, this can translate into thousands of dollars in long-term savings. There are also prescription drug assistance programs, energy assistance programs such as LIHEAP, and food assistance through SNAP. Even if you were denied in the past, eligibility guidelines sometimes change. Veterans should pay close attention as well. VA disability compensation does not reduce Social Security retirement or SSDI benefits. However, if you receive SSI, certain VA pension benefits could affect your SSI amount. VA disability compensation, however, is excluded from SSI income calculations. The key message is simple. Do not assume Social Security is your only support. In the next section, we'll walk through practical action steps to take before February 6th arrives. Action steps before February 6th. As February 6th approaches, preparation is your strongest advantage. Instead of waiting and wondering, there are specific steps you can take right now to make sure everything goes smoothly. First, log into your My Social Security account at ssa.gov. This is one of the most powerful tools available to you. Inside your account, you can verify your current monthly benefit amount, confirm your payment schedule, and review your cost of living adjustment notice. If the amount listed online matches what you expect, that's a strong sign your payment will process correctly. Second, confirm your direct deposit information. If you have changed banks recently, opened a new account, or closed an old one, update that information immediately. Incorrect banking details are one of the most common reasons payments are delayed. Third, keep copies of important documents. Your annual Social Security statement, your award letter, and your COLA notice should be stored in a safe place. If any discrepancy arises, having documentation readily available allows you to respond quickly. Finally, monitor your account carefully on your scheduled payment date. If something seems incorrect, whether the amount is lower than expected or the payment does not arrive, contact Social Security directly at 1-800-772-1213 or schedule a local office appointment. In the next section, we'll talk about the emotional reality many seniors face while waiting for these deposits and how clarity reduces anxiety. The emotional weight of living on fixed income. For millions of seniors, Social Security is not just a government program, it is the financial foundation of daily life. Even with the 2.5% COLA increase for 2025, many retirees are still feeling the strain of rising prices. Groceries cost more than they did a few years ago. Prescription medications continue to climb. Insurance premiums, rent, property taxes, everything seems to stretch a fixed income thinner. When you're living month to month, uncertainty can feel heavier than the numbers themselves. That's why updates like the February 6th payment matter, not just because of the dollar amount, but because of clarity, knowing exactly when your deposit will arrive, knowing whether it reflects your updated COLA, knowing whether you qualify for concurrent benefits or state supplements. That knowledge reduces anxiety. Financial stress has a way of creeping into every part of life. It affects sleep, it affects health, it affects decisions about whether to delay necessary expenses. But understanding your payment schedule and benefit structure gives you control. You earned these benefits through decades of work, or you qualified because of disability or financial hardship. Either way, they are yours. In the next and final section, we'll bring everything together and clarify exactly what you should expect as February 6th arrives. What to expect when the payment hits. As February 6th arrives, the most important thing you can do is approach it with clarity instead of uncertainty. If you are an SSI recipient whose payment was adjusted due to the calendar, understand that this is your regular monthly benefit arriving according to processing rules, not an unexpected bonus. Budget accordingly, because that deposit is meant to carry you through the full month. If you receive retirement or SSDI benefits, your payment will still follow the Wednesday schedule tied to your birth date. Make sure you know which week applies to you, second, third, or fourth Wednesday. That prevents unnecessary worry if February 6th comes and goes without a deposit. If your total benefit reaches or exceeds $2,100, it is likely the result of combined benefits, retirement plus SSI, SSDI with dependents, or state supplemental payments, all adjusted with the 2.5% COLA increase for 2025. When the money arrives, verify the amount. Compare it to your COLA notice. If something seems off, act quickly. Contact Social Security directly. Do not rely on third-party sources or unsolicited calls. Most importantly, remember this. These benefits are not charity. They are earned through years of work, contributions, or qualification under federal guidelines. Clarity gives you confidence. Confidence allows you to plan, and planning is what protects your financial stability moving forward. In the next section, we'll deliver the final takeaway message about protecting and maximizing your Social Security income, protecting your benefits and avoiding costly mistakes. As we move through February, protecting your Social Security income is just as important as understanding it. First, remain alert to scams. Whenever payment dates gain attention, especially with headlines mentioning $2,100 or more, scammers increase their efforts. Remember this clearly. The Social Security Administration will not call you demanding immediate action, threaten to suspend your benefits without written notice, or request payment through gift cards or wire transfers. If you receive a suspicious call, hang up. If you receive a suspicious message, delete it. Second, review your benefit statements carefully. The 2.5% COLA adjustment for 2025 should already be reflected in your monthly amount. Compare your deposit to your official notice. Small discrepancies should be addressed quickly before they compound into larger problems. Third, understand your reporting responsibilities. If you are on SSI, you must report changes in income, living arrangements, or resources. Failing to report changes can result in overpayments and eventually repayment demands. Staying proactive protects you from unpleasant surprises later. Finally, keep your personal records organized. Award letters, annual statements, and correspondence from Social Security should be accessible. If you ever need to dispute a reduction or clarify your eligibility, documentation is your strongest defense. Your benefits represent decades of work, contribution, or qualification through hardship. Protecting them is not optional. It is essential. In the final section, we'll summarize the most important takeaways you should carry forward beyond February. Final takeaways: know your rights, know your numbers. As we close this detailed breakdown of the February 6th Social Security payment, let's bring everything into clear focus. First, understand your payment schedule. Retirement and SSDI benefits follow the Wednesday structure based on your birth date. SSI typically arrives on the first of the month, unless adjusted due to weekends or holidays. February 6th is not a universal payment date. It applies primarily to specific SSI timing adjustments. Second, recognize how the $2,100 figure becomes possible. It is not a standard flat payment. It reflects combined benefits, retirement plus SSI, SSDI with dependent benefits, or state supplemental payments, all enhanced by the 2.5% COLA for 2025. Third, remember that early payment does not mean extra payment. If your deposit arrives ahead of schedule, budget carefully. That money must last until the next regular cycle. Fourth, protect your benefits. Monitor your My Social Security account. Keep your direct deposit information updated. Report income changes if you receive SSI. And never respond to suspicious calls or messages claiming to represent Social Security. Finally, hold on to this truth. These benefits exist because you earned them, qualified for them, or contributed to the system for decades. Understanding how they work gives you power, power to plan, power to question discrepancies, power to protect your financial future. February 6th is not just about a deposit, it's about clarity, and clarity builds confidence in retirement.